Welcome back to the Phil Bach podcast. It is great to be back and recording, and we've got a great episode. We are talking to Shana Sissel, Queen of Alts. Shana, thanks for coming on.
No problem. Thanks for having me.
So we've known each other for some time, and I've seen firsthand your career take a turn, a very exciting turn in the last, 2 years or so-ish, right? Give or take. And you are now an entrepreneur. You're building in the fintech space, you're building the alternative space, which is your background. But that's a big departure from where you'd been in, primarily, CIO, co-CIO roles, working with fintech companies, with larger asset managers. And that's I want to talk a little bit about, what was the impetus for that, what that's been like, what the early, experiences and returns have been, and, why you would choose to, forego the security of big companies and a great career to go out on your own and work for yourself and take that risk. So, I'll kind of kick it to you to set the table and start with, before you had formulated and started the journey with Banrion, what did your career look like up to that point?
Well, it's funny, Phil, when you say we've known each other for a long time, I honestly could not tell you when I met you or how I met you, except that I've known you for what feels like forever.
CLS.
It could have been. Yeah, it might have been. It could have been when I was at Fidelity. I honestly don't remember, but that's a good thing because, that just speaks to how long we've known each other. But yeah, as you pointed out, I have always had traditional jobs until about a year ago. I worked in very traditional, safe, secure corporate roles. I worked for Fidelity. I worked for Orion. I worked for Ariel Investments. Mercer, Russell, I'm naming some big names, some, heavy hitters in the industry. And I worked in a variety of roles, but the vast majority of the work that I've done overall this time, probably over the last 15 years, has been doing manager research for institutional clients, pension funds, endowments, the like. And I was always making fund selections. Specific area of expertise is alternatives. But about right around the time of the pandemic, my career took a crazy turn where I went from secure, stable corporate world to a free for all intents and purposes. We had the pandemic, everything that came with that. I went through a divorce. I lost my job multiple times. I had been laid off from Orion following the pandemic as part of a pandemic casualty. I had a great run at Spotlight Asset Group, but Spotlight unfortunately faced some operational hurdles that led to them having to eliminate my job. And then after that, I kind of jumped around trying to find the right spot. You and I did some work together. I know there could have been an opportunity to join that team, but ultimately I kind of thought I don't want to go into a space that I'm not very passionate about and that I don't love. And alternatives is kind of where my passion lies. So I went looking for ways that I could work in that space, and I just couldn't find the right fit. I did some consulting for some RIAs, started building some alternative platforms for them, but nothing really stuck, largely because I'm sort of captive to Chicago. Because this is where my son lives. This is where his father lives, and we want to maintain a good co-parenting relationship. But I really did struggle. And after last June, I, was really struggling to find the right opportunity. I was just in a not so great place, and I wasn't sure what to do. And I was at an event, and I got a call from the Wall Street Journal, random cold call out of nowhere, never knew the reporter. My name was given to the reporter by just somebody in our network, I still don't know who, that was doing a story about the rise of liquid alternatives and wanted to talk to somebody about it. And so gave myself, if I don't have a role and I'm not really working for anybody, but I can still get a cold call from a Wall Street Journal reporter, maybe I have something that people would pay for. So I still didn't know what I wanted to do. I was still struggling, but I was feeling better. After the Wall Street Journal called me, I got an inquiry through my personal website from Bloomberg saying, we want to have you on. And I just thought to myself, like, if these networks, if these people still are contacting me on their own and basically tracking me down, I have something that I think I can build. And I knew that I was passionate about alts. I knew that whatever I was going to do, I wanted to go in that direction. And the idea for Banrion kind of came from that. It took a little while to kind of flush out what Banrion was ultimately going to become. And it came out of talking to financial advisors who would reach out to me saying they wanted to learn more about alts. They wanted to start investing in alternatives, and they just didn't like the options that were available in the market. They felt that they were insufficient, or they had bad service, or they just didn't feel like they were serving what their customers wanted. But more importantly, they were struggling because the vast majority of financial advisors don't have this massive book of business that's, average family household net worth over 10 million, mass affluent financial advisors. That's not their client. Their client is, mass affluent. So kind of your small business owners, your doctors, your lawyers in middle America, and they're not necessarily accredited. So they wanted the benefits of alternatives. They didn't know how to access it for the vast majority of their clients. They had this small subset they could use iCapital or Case on, and they were just unhappy with not having something that they could use and scale with. So as I talked to more and more advisors, the idea for Banrion of providing something that would provide advisors a scalable investment opportunity with a focus on alternatives kind of came to be.
Yeah. Okay. I want to get to alternatives. We'll get to that in a minute. But before we do, I want to ask, we know each other, and I know that you are very self-aware of yourself. And
Yes.
I think that there's a certain type of corporate employee that has the ability to stay in an organization for decades with making very little impact, very little, really moving the needle for the company, somewhere around zero, but is built to, lay low and play politics and make the right allies and do very well in a corporate environment. You're not that person. And there's a certain personality type, I think, that is able to go out as an entrepreneur and make things happen, start with nothing, and just, make calls, drum up business, get things done, wear 20 hats and work 20 times as hard and do things. And I think, you are a little bit of that personality. And what I want to ask here is you mentioned that you bounced around a little bit, and I know you lost your job. You just mentioned that you had at one point lost your job, but you could talk a little bit about your career, but I think, you are very self-aware, and I want to kind of ask about your experience working in the corporate environment, in the corporate world, and how that suited you. And what was that moment that you realized that, what, I can just do this on my own. I need to do this on my own. I'm made to do this on my own. This is what I'm going to do.
So let's start by saying that I am the most reluctant entrepreneur that you can possibly imagine. I'm pretty scrappy. And as you said, I didn't grow up with money. Kind of blue collar family. I grew up in Worcester, Massachusetts. If anybody's familiar with Worcester, it's a very blue collar, lower middle class kind of place. It's got a lot of colleges, a couple of factories, and that's, the genesis of Worcester. My dad was a cop. My mom was an inner city school teacher. My sister's a 911 dispatcher. My other sister, her husband works for the electric company. This is where I come from, kind of the, blue collar roots. And so you kind of grow up scrappy when you grow up in that environment. My mom's an immigrant. She came here from Ireland. And my dad grew up, in the traditional Polish neighborhood. My grandparents spoke a bunch of languages. Grandfather worked at U.S. Steel. This is just, all of us are scrappy. My brother likes to remind me all the time, you're not that cool. Don't forget where you came from. And so I didn't always fit in corporate America with those roots. My dad really wanted me to be a teacher. And I thought about it. It just seemed to make more sense, given where it came from. But I always kind of wanted more. Even when I was younger, I wanted to be a dancer or a singer, and I wanted to be the star of the school play. And I did some modeling, and I did some pageant stuff, and all of that stuff kind of showed me that there was more to the world than little Worcester, Massachusetts, and teachers and doctors and nurses. And so I wanted more. So when things just didn't seem to be clicking in the corporate world, and quite frankly, I don't always click in the corporate world because, as you pointed out, I'm not, somebody who can stay quiet, not voice my opinion, and not make waves. It's just not who I am. I have an opinion. I'm not afraid to share it. And some people don't like that. And so I didn't always fit in. And I always struggled to figure out, like, how can I be successful? Because I always would be, one of the top employees, but never the one that, like, when there's 7 people going for the one promotion, I was never like top, like I was never the favorite. And so it just made sense to kind of go in that direction, but it was only because I felt like I had no other choice at the time. And quite frankly, it was a blessing in disguise. And the best thing I ever did was start Banrion, but I'm not going to lie and say it hasn't been a grind, because while it's been the best experience I've ever had, and I'm so excited because I'm like building something real that I think is going to be disruptive to the industry. And I know, as I talk to advisors, that the problem that I saw that I looked to solve is exactly what they wanted to have solved, and that they love the way we're approaching this and what we're building for them, because we're doing it with their input, with them in mind, and not the other way around. And so now I'm excited, but it has been a constant state of anxiety at all times. There have certainly been times where I was freaking out. And even now, like, we're doing a capital raise. It's been a grind, man. We started raising right before SBV went down. And that has not made it easy. VCs after that stopped funding. And now they're willing to take our calls again, but they're moving slower. And the valuations have changed. And, we're not looking to raise a lot of money, but talking to a lot of people, and everybody seems to get us, but no one is willing to take the risk, which is weird because we're doing a seed round. Like, we know we're early. Isn't that the point? But everybody's kind of like, well, come to us when it's Series A, because we think you're doing great, but, there's a lot of competition. And so, it's been a grind. It's been a constant state of anxiety, but I'm really glad I did it, because this is most certainly better for just my personality. And the way that I function is being able to have an opinion and do things the way I think they need to be done, is why I think we'll be successful. Because I do think I understand the market. And even if large corporations didn't want to listen to me, now I can go and do it my way and hopefully disrupt their businesses and say, I'm not an I told you so kind of person, but I do kind of love that I'm on TV a lot, because I have a lot of I told you so moments that I can refer back to. But
they'll listen to you. They'll listen to you when they need to acquire you, and the numbers are eye-poppingly big. And it's so funny to me the way corporations are with talent that they have on their teams at their disposal, and all the resources and the client relationships. They have all the elements in place, and they just won't let people run with ideas. They just won't. But when those same people go and break off and do it on their own, they'll come back and they'll pay 20x what the investment might have been to acquire them. And I've seen this so many times. It's so amazing to me. And it's, I guess it's not their money, right? It's not, it's not like, well, I could have funded the same business for $1 million and given somebody a $25,000 raise, and everything would have been great. They would have been happy. And now buying the same company for $100 million. It's so inefficient. And, like the famous quote, your margin is my opportunity. It's like their inefficiency is our opportunity, right? Yeah. So we can go take these ideas, take these visions, build it, and bring it back and sell it back into corporate America in just a few years. If we're right, when we're right, these things take off. It's an incredible opportunity, but that's of course, that's a huge simplification. And that assumes that, it can be built, that the capital's there, that nothing goes wrong between here and there, that, all the 10 million things that do go wrong can be overcome, and that you find a way forward. But I mean, I don't know about you. I'll just for myself, from the day I went entrepreneurial, it just, you feel so much more alive, and there's really no going back. Even if I wanted to, I think it'd be very hard to go back.
I fully agree. And, it's funny to me because when I think about it, and kind of how I got to where I am and what I'm building, it's like I try to convey certain things to people, but a lot of people think the reason why business fails is because it was a bad idea. I'm here to tell you that one of my biggest fears is not that my idea isn't good, because I know it's good. It's that I won't have enough capital to be able to support demand. Like, this is the least bad problem to have, but it is a problem. And you can have an amazing idea, but if you don't get enough runway to execute it, or you're not able to hire or build to meet the demand, like, that's a problem. And that is kind of like what we struggle with at Banrion, is that, we have been able to raise capital, thankfully, but only enough capital to meet what we're doing currently. And the amount of cold outbound reach that we get, or inbound, however you want to say it, is mind blowing. Through our website, through the media appearances we do, we get so much interest in what we're doing, and just onboarding people and meeting that demand and making sure that we can do it right. That's a big thing for me. We're doing an integration right now. And the last thing, we have huge firms that are super interested in working with us when the integration is done. And I'm focused right now on bringing on asset managers, because what I don't want to happen is have this integration go through and have this great technology, bring on these huge firms, and then have nothing for them to invest in or nothing to show for it. And that is part of the fear too, is like, you have a great idea, but you're only going to get one bite at the apple, right? So like, you want to make sure that when you go live, when you are going to market and you put that tech out there and you bring the big guys on board, that their experience is going to be better than what they're leaving. Because if you aren't better, and we saw this with Twitter and Threads, right? I like, this is a great example. People wanted an alternative to Twitter. People really did. They went to Threads, but Threads wasn't ready for prime time. They didn't have a lot of the functionality. They couldn't get like good engagement. People were confused by their timelines. After a couple of days, they left and they haven't gone back. And Threads could fix everything now, but they've already lost. And so that's my biggest fear. And you don't think about these things when you see entrepreneurs from the outside, but like, you really do worry that like, if you have a great idea, execution is so important, but execution requires capital. And so those two things go hand in hand. And you can have the best idea in the world, but if you don't have the capital to execute it the way that you need to, it's all for naught.
It's a huge opportunity for your capital partners and for VCs right now. Let's talk a little bit about alts, right? So I think we should set the table by defining what is an alternative.
Can we say what it isn't? Because that's easier.
Sure. Yeah.
All right. So alts are everything that's not long only equity and long only fixed income. That's the definition. It's literally everything else. So it can be hedge fund like strategies. It can be people who buy stocks and go short stocks. It can be using derivatives. It can be futures. It can be currency. It can be private funds like private equity, things that are illiquid. It can be antiques and paintings. It can be it's literally everything. So it's a lot easier to define what isn't alternatives than what is.
Coming out of a 40-year cycle where stocks are straight up, fixed income until a year ago, pretty much straight up. The 60-40 has done so well. There's so much blind trust right now. I could say complacency by investors in the S&P 500 and the idea that we can invest only in the US. Don't even forget about alts. People aren't even worried about geographic diversification, right? There's so much money in index, market cap weighted index funds. So even within equities, people aren't thinking about alternative factors and weightings and all that. Do you think the investor complacency is kind of, how does that, what breaks that complacency? Is it a big drawdown in stocks? Is it alternatives outperforming equities? Like, how do we get people to think about diversification and to think about, the fact that these stocks, and when we say the stock market, we're generally talking about the US stock market, which means that we're really talking about 7 stocks, right? Which are driving 100% of the gains this year, 28% of the S&P 500, and over 50% of the NASDAQ. So we're really talking about large cap, mega cap tech, right? And it's like everyone is putting all their eggs into this one basket. I mean, what breaks that complacency? What do you tell investors about why they should care about alts?
Well, there's a couple of things, first and foremost, I think your point is like alts have to show that they add value. And we've actually seen that over the last 18 months or so. Alts have outperformed. We're starting to see increased interest. The problem is people start to performance chase and choose the wrong alts. And like I said, it's a massive universe. And so what worked before may not work now, but that doesn't mean alts aren't good. You just have to understand the nuances of how to build it. And that is something that I think advisors and investors in general are poorly educated on, because it's never been something that anybody cared to teach, because why? Also, we were just talking about how timing is everything. When liquid alts launched, making alternative types of strategies available to everyone, and the original ability to do that was mostly hedge fund-like strategies, that was in 2007. And by the time there was enough product in the market for people to take notice, the financial crisis was in full swing, and these products were doing amazing. And so people performance chased into the products who were absolutely killing it through the financial crisis. And then they went through like 15 years of underperformance, because that's the nature of a hedge product, right? Like you're hedged. By definition, you do not have 100% exposure to equity or fixed income. You are hedging that. And so people got burned, and then they weren't willing to look at it. So there's shows like Shark Tank that introduced the idea of investing in companies and people from a venture capital and angel investor perspective, that kind of opened people's eyes to the opportunity of efficient markets where, you get rewarded for the risk you take. You may have 10 companies that fail, but the one that succeeds is going to succeed to such an extent that it doesn't matter that 10 failed. And the average investor, the average person wants to have access to that. So they're starting to think about that. And that is alternatives. And now we have interval funds, and there's a number of different ways that the average person can actually access those types of investments. And people have seen through the pandemic, like sneakers took off, and you can see there's other ways to get returns and value outside of the stock market. Now, so the stock market has 100 years of track record, 100 years of history. It's pretty much undefeated in that respect. But the people who always do best in the stock market actually take risk. They tend to have concentrated positions, and they make the right bets. Nobody really gets rich from just the S&P 500, no matter what Warren Buffett wants to tell you. You'll do fine. You will definitely compound your returns, and the stock market will do well, but you will always make more money by taking risk and taking bets, and alternatives allow you that opportunity. It's a less efficient market where there's less information, and those are the kind of markets where having an edge in information or taking an edge in that risk will either pay off or not, but you have to take risk to get reward.
Yeah. What is your favorite alt right now?
What is my favorite alt right now? That's a good question. Obviously I do a lot of work in liquid alts. In that respect, there's a nice amount of offering. We work with AGF and Tays Asset Management, and those firms are firms that I worked with and had in my portfolios prior. I had in my portfolios before Tays became a client. I've been talking about BTAL for years, and that's AGF's equity market neutral fund. I think that's a great opportunity. But if I had to really choose an area that I think is really interesting right now, I really do like distressed debt. As we get to further points of distress is always an area that pays off big time because it's higher up in the capital structure. So that's probably an area that I'm most attracted to right now, is sort of that distressed area.
Mm-hmm. How should investors think about like a framework? Are they optimizing for low correlation to stocks and bonds? Are they optimizing for absolute returns? How should investors think about incorporating alts into their allocation mix?
All of the above. I start with the foundation of low correlation. So then that's where we get to the managed futures, the market neutrals, the option hedging strategies, any type of fixed income arbitrage, anything of that nature. That's going to have lower correlations. Global macro is another one. And that will be able to perform even when the market's going up, when the market's going down. It gives you that greater diversification, actually improves risk-adjusted returns. Might not give you tons of excess returns, but it definitely decreases risk. And that's been shown time and time again. I've shown it in the research I've done, but academic research continues to support that. But then you can also look at, like what we talked about, where there's a place you can have an information edge. You just have to understand that when you're working in markets that are less liquid, that don't trade on exchanges, that you can't get daily pricing for, there's risks you need to know, which is like, you don't get your money back right away. You have to be able to commit. This is something you have to think about, what you are comfortable allocating to an illiquid space. And I would say the average person could probably afford to put 10% into a less liquid space to get that return. But it's locked there, and you really won't know how you're doing till you're 5 years in. I don't care if they give you a price every quarter. That's a guess at a value. It's not reality. But that's like private equity and private credit. I don't consider those diversifiers, though. I consider those potential for excess total return and traditional allocation places like fixed income and equity. So I would put private equity in as a part of my equity allocation, and private credit the same. They're not diversifiers. They still have the same beta as, public versions. But because they're illiquid, and because you can have an information edge, and because not everybody can access them, you can get higher outsized for future returns. And so that's kind of how I look at it.
Over the last couple of years, really since you've been on your own, even before that, you've been putting yourself out there quite a bit, pretty fearless. So you're on Fox Business. You're now doing a podcast. You're on social media. You've also been, we were talking earlier, there's like these, vicious trolls on Twitter that are attacking you and all this nonsense that comes with it. What are your thoughts on, being the face of your own startup, being out there, putting yourself out there publicly?
Well, I kind of understand that when you put yourself out there authentically, and some people will say I wear my heart on my sleeve, you are going to attract people that will use that against you. Like if you're somebody who puts yourself out there and is honest and authentic about your feelings at times and things you're going through, people who want to bring you down a notch will use that to hurt you. And it's easier to do when they're anonymous and behind, a computer screen, and I don't know who they are. I can't say that I let those folks bother me. I'm a block and continue kind of person. They don't matter, and I'm not going to waste any time thinking about it. But I would say what I do get the most hate for is also the thing I get the most messages from women for, which is that I believe that women are generally taught that if they want to be successful in industries that are male dominated, they can't be distracted, and they can't be too feminine, right? And I didn't start seeing success in my career until I stopped playing that game and just said, you know what? I love being a woman. I love glamour. I love hair and makeup. I love taking care of myself. I used to be a model. I don't hide that. And I'm not going to continue to worry about that, because people will make judgments regardless. And even when I tried to play that down, I still got judged for it. So why bother? And I would say that more than anything, I get emails from girl dads, from younger women in the industry, saying that they so appreciate that about me, because it makes them feel like they can be authentically who they are, and they don't have to sacrifice what makes them happy to succeed. And I've certainly seen a lot more younger women lean into using that opportunity to connect with other women. And while it's the place I get the most hate, because, it's easy to call me a bimbo and say I have nothing of value to add, that's fine. My track record speaks for itself. People who invest with me know better. Anybody who spends 5 minutes talking to me realizes I'm not an idiot. But I also try to speak to people who don't understand the markets. The vast majority of people that tend to relate to me and who I want to connect with are going to be the people that maybe are a little intimidated or maybe don't understand the markets. And I want to make them feel like it's for them and they don't have to be intimidated, because that's how we change things. But you can't talk over their head, and you can't be condescending, and you can't talk to them like they have a base knowledge like we do, So yes, you have to simplify things. That's actually what makes me really good at my job. That's why advisors want to work with me, because their clients need to be educated. They need to be educated, and you can't speak to them like they know more than they do, and you can't make them feel shame because they're not as knowledgeable as you think they should be. It's complicated. Alts are complicated, and you're not going to get anywhere by talking over people's heads. I'm certainly not going to succeed in my business if I can't simplify something that's really complicated. So when it comes down to it, because I am willing to put myself out there, I have to accept that what comes with that is people who will try to take me down a peg, use my authenticity and my vulnerability as a weakness, and try to make it seem like I'm, something that I'm not. But at the end of the day, I know who I am. Anybody who spends 5 minutes with me knows who I am. And I'm not going to change who I am as an authentic person and pretend I'm something that I'm not. And if it makes people uncomfortable, well, good, because that's change comes from discomfort. Nothing good, no change comes from being comfortable. I mean, anybody who's an entrepreneur knows that. You cannot be a successful entrepreneur if you're worried about being comfortable, because being an entrepreneur is the least comfortable thing ever. And so if how I present myself and things that I say and the way that I present myself makes people uncomfortable in this industry, then I'm probably doing my job well.
I love that. Change comes from discomfort. There's no question. I've had to come out of my comfort zone as an entrepreneur many times. People think it's like, oh, why are you attacking this firm, or like, different things, when it's like, no, my natural state is to get along with everyone. This is not, I'm pushing myself out of my comfort zone to do what has to be done in order to get this message across, or in order to, sometimes shake complacent investors, or, things that you have to do. When you look back over the last, year and a half, and I know you're still early into the entrepreneurial journey, but you've already had a lot of ups and a lot of downs. And when you look back, what were some of those, I guess, let me ask this. Do you feel like you have sacrificed to be where you are today?
No. The ups and downs I've gone through over the last year, I would say, have been in ways that weren't related to the business. If anything, the business has been the most gratifying thing I've done over the last year. I've had to deal with the death of somebody who was very dear to me. I had to deal with, all the complexities of co-parenting. I have, dealt with having to deal with people who, as an entrepreneur, can't accept that I also am a mom and a single mom, and my child will always come first. And I'm not going to take that meeting at 6:00 if it means that I have to miss my son's soccer game. I'm just not going to do it. I will make time for my son. That's a priority, because that time is valuable and you don't get it back. So I've had to deal with a lot of that kind of stuff, but the business itself has been the one thing that has been a stable source of gratification for me. And that scares me a little bit, because I feel like as an entrepreneur, it shouldn't be a smooth ride. And I'm not saying it has been. Like, I have had plenty of times where I freaked out. And, even now it's like, we've brought in a new investor. That's wonderful, but I still only have so much runway left, and I have amazing employees, and we have this great thing that's about to happen, and I need to have capital to do it, and still grinding as it pertains to that. And, instead of getting $1 million checks, we're getting $50,000 checks, and that's great, but that only moves the needle a little bit, and it's still more you have to do. So I don't want to make it sound like it's just been this, wonderful journey, because it hasn't. But I will say that it's been the most gratifying thing in my life over the last year and a half. And if you had asked me beforehand that would be the case, I probably wouldn't have believed you. I would have thought something different, because it is a scary journey. You're taking a lot of risk, and I have my son to support, and that's scary. But for the most part, the last year and a half has been full of ups and downs, none of which has been all that much as a result of the ups and downs of the business. It's been more of the ups and downs of just life in general. And, but the business has been great. But I am not blind to the fact that building anything is difficult, and there will be times where you aren't sure if you can continue. And I have definitely had those moments. Thankfully, they have been short-lived.
what
You
is,
know, I talk to you all the time. I'll call you when I'm having one of those moments. It's like 11 p.m. or midnight, and I'm like anxiously texting you, like, we're going to run out of money. I don't know how I'm going to exist. I need to sign another client. And you're like, calm down. You will be fine.
yeah, but your
And don't worry
confidence,
about it.
but your confidence is never shaken, and your focus on the end point, right, on what, on your vision for what Banrion is going to be at full maturity when it's fully built out and operating and all that, has never wavered. You are very steadfast and clear, and through the ups and downs, it's that focus and that confidence in yourself and that inevitability of what you're building that allows you to get through those periods, because at the end of the day, look, it might be a short ride, it might be a long ride, it might be a linear line, there might be ups, but at the end of the day, you know where you're headed, right? And you know what this company looks like at the end. And that allows you to kind of, to get through those bad periods and to brush them off and to keep going, because, okay, fine. So we had a setback. So it's going to be a little bit longer than I thought, but we're still going to end up in the same place either way.
And it's good because I have friends like you who are entrepreneurs who I can lean on when I'm feeling anxious. Is you. Tyrone is another person that I text at random hours, and when I'm having like a nervous breakdown, and he just reminds me, like, you're a badass, calm down, you will be fine, whatever I can do to help. And he almost always provides an introduction at that moment that turns into something. Jamie Hopkins is another person who I can lean on whenever I need to. He's amazing. He travels a lot, and he is sacrificed a lot for his career, but he is one of the people that I can contact at any time, and he will listen and tell me, you're awesome. We all believe in you, and we know you're doing something great. Like, take a moment. And the one thing all of you say to me every time is, like, look back where you were a year ago and see what you've built to this point. How is it that you won't succeed? Because as far as I can tell, you've built something amazing out of literally nothing at your lowest point. So don't forget how much you've accomplished to date instead of panicking. But that's also what makes you a good entrepreneur, right? Because in order to be good at building something, you have to be able to see where you need to be in the future and not reflect too much on the past, because then you get complacent and you don't worry about your competition or building it right or making sure your customers are happy. So, it's good because I have you, I have Tyrone, I have Jamie that I can talk to when I need to, and help me through that, because you've been down that journey. And I this is my first time. So it's good to have people you can lean on, and that helps in those moments.
Yeah. And so tell me, what is that end state? What is that final vision of, you and the company and Banrion and Alton? I mean, what is this final vision that you see that maybe, other people can't yet see, but that is going to be in place in the future?
I have no doubt in 5 years, we will be the dominant player for alternatives for the advisor world. I am 100% certain of this, because every time I talk to an advisor and I hear their response to what we're building, they just continue to confirm that feeling. And when we talk to the big aggregators, same thing. So I know that that's where we'll be. And so my hope is that in 5 years, 10 years, that we will be in a position to either IPO or be acquired by a larger person. And then I can go off into the sunset with success that I never possibly imagined, and do the things that I've wanted to do for my family. One of the things that I am hyper focused on being able to achieve is, my dad is 78 years old and he loves the beach, the ocean. He loves Cape Cod. He has always wanted to live on Cape Cod. I need to make sure that he has the opportunity to spend what is left in his life living on Cape Cod. I want to buy them a house. I want to have a house on the beach, which can be the family home that people can go to and feel comfortable. This is clear, but it's because I want to do for my family. And those things come from the success of this business. And so much of what drives me is the things that I want to make sure I can accomplish for the people who mean most to me.
Perfect place to leave it. Thank you for coming on. This has been great. Where can people learn more about working with you?
You can go to our website, www.banrion.com, banrioncapital.com. You can email me directly, shana@banrioncapital.com. And then I'm on Twitter, I'm on Instagram, I'm on LinkedIn. You can find me anywhere. Banrion also has pages on all of those social media sites. So that's where you can find us.
All right. Thanks for coming on. Thank you to the audience for your time and attention. And we will be back very soon.
Thank you for listening to the Phil Bach Podcast. If you enjoyed the show, please take a moment to drop a review. This show was published for entertainment purposes only and is not investment advice. Please contact a licensed professional before making any investments. Some of the securities discussed on the show may be owned by its participants. Opinions expressed on the show may not reflect those of their employers. Stay hungry and stay foolish.